Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and in this series, I spend hours doing research to find the hidden gems of the dividend world so you don't have to. This week, there were 96 stocks that had an ex-dividend date between April 7th and April 11th of 2025. 32 of those stocks showed that they can not only pay, but grow their dividend for at least 5 consecutive years, and only 9 of those stocks were able to make the risk of investing in individual stocks worth it by also outperforming the S&P 500 over a long period of time. I then took those 9 stocks and picked my 5 favorites to share with you guys today. Here on my channel, I do a few things different than what you might see in other places on YouTube. First, I believe in accountability, so I'm going to be showing you guys not only if I ever talked about these stocks before here on my channel, but also how they've done since I mentioned them. Second, I'm not worried about the biggest and flashiest stocks that you might hear mentioned 1,000 times all over the internet, but instead I let the numbers speak for themselves and bring you guys the best of the best each week. Lastly, I know that one of the things that cause dividend investors to invest in subpar companies is the frequency of the dividend payments or how long they need to wait before getting paid. So I use a list of stocks that have ex-dividend dates of this coming week so I can help you find quality companies that'll all pay you sooner rather than later. For anyone that doesn't know the significance of the ex-dividend date, the ex-dividend date is simply the date that you need to own the stock before in order to get paid the next time that company pays a dividend. The good news is I put these videos out like clockwork every single Friday at 8 a.m. Central Standard Time, which is 30 minutes before the market even opens up, so you have time to watch them and decide if these stocks are right for your portfolio or not. With that being said, there is some urgency to watch these videos when they go out, because if you guys watch these videos on Friday after the market's already closed, or even worse, the next week, you already missed your chance and you'll now need to wait 3 long months before you get your first dividend from any of these companies, and Sweet Brown says, "Ain't nobody got time for that." And now, let's go ahead and dive into number 5 with Darden Restaurants, stock ticker DRI. With mention in today's video, this is the very first time I'm talking about this stock right here on my channel, so let's go ahead and learn a little bit more about this company. DRI is a quarterly payer in the consumer discretionary sector, paying $5.60 per share per year with a forward dividend yield of 2.73%. DRI has been paying and growing its dividend over the last 5 years. They have a 3-year dividend growth rate of 16.26%, a 5-year dividend growth rate of 10.71%, and a payout ratio sitting at 48.57%. Now, at the time of recording, surprisingly enough, Darden Restaurants was only trading 2.78% off of their 52-week high. They have an ex-dividend date of April 10th with a payout date of May 1st, and looking at this chart, you're going to be able to see the growth of Darden Restaurants versus the S&P 500 over the past 10 years while only reinvesting dividends since then. You guys can see down here towards the bottom that DRI would have grown that $10,000 into $44,170.36, which outperforms the S&P 500 by $12,429.84. Next up, and coming in at number 4 on this week's list, is Erie Indemnity, stock ticker ERIE. Including today's video, this is now the 7th time I've spoken about this stock right here on my channel, including 7 selections in a row. And if you go all the way back to the very first time I spoke about it, which was episode 68 on September 29th of 2023, Erie Indemnity is still outperforming over the short term, and you're going to see why that's pretty impressive with this right here. Erie Indemnity is a quarterly payer in the financial sector, paying $5.46 per share per year with a forward dividend yield of 1.33%. Erie Indemnity has been paying and growing its dividend over the last 35 years. They have a 3-year dividend growth rate of 7.2%, a 5-year dividend growth rate of 7.22%, and a payout ratio sitting at 33.6%. Now, at the time of recording, this is what I was alluding to earlier, Erie Indemnity was trading nearly 25% off of their 52-week high and is still outperforming over the short time frame I showed you guys earlier. They have an ex-dividend date of April 7th with a payout date of April 22nd, and again, looking at this chart, over the past 10 years, Erie Indemnity would have turned that $10,000 investment into $58,770.94, which outperformed the S&P 500 by $27,030.42. Next up on this week's list, first one on the podium, coming in at number 3, is MasterCard, stock ticker MA. Including today's video, this is now the 9th time I've spoken about this stock right here on my channel, including 7 selections in a row. And if you go way back to episode 3 or July 1st of 2022, the first time I spoke about it, MasterCard is outperforming the market by more than 20% since my first mention. So let's dive a little bit deeper on this one right here. MasterCard is a quarterly payer in the technology sector, paying $3.04 per share per year with a forward dividend yield of 0.56%. MasterCard has been paying and growing its dividend over the last 14 years. They have a 3-year dividend growth rate of 14.48%, a 5-year dividend growth rate of 14.87%, and it's super sustainable because the payout ratio sits at just 16.26%. Now, at the time of recording, MasterCard was trading 7.15% off of its 52-week high. It has an ex-dividend date of April 9th with a payout date of May 9th. And looking at this chart, that $10,000 investment into MasterCard would have grown into $65,550.60, which outperforms the S&P 500 in the same time frame by $33,810.08. With that being said, we're a little bit over halfway through this week's list. If you guys haven't already, help me out by leaving a like on the video. It helps me get my content out to other people that also might enjoy it. And if you guys really want to help me out, it's still free to you. Use the comment section down below. You guys can let me know what you guys think of this week's list, if you guys own any of the stocks on this week's list, or you can just say hi in the comments down below. But now, let's get to number 2. Next up on this week's list, earning the silver medal, coming in at number 2, is Intuit, stock ticker INTU. Including today's video, this is now a record-setting 12th time I've spoken about any stock right here on my channel, and this one's been selected 12 times in a row, which means every single time that it's been eligible to be on this series, it's been on the series. So if you guys go all the way back to episode 3 or July 1st of 2022 when I first spoke about it, Intuit is also still outperforming since then. So let's go ahead and check out the numbers behind this stock. Intuit is a quarterly payer in the technology sector, paying $4.16 per share per year with a forward dividend yield of 0.69%. Intuit has been paying and growing its dividend over the last 14 years. They have a 3-year dividend growth rate of 15.15%, a 5-year dividend growth rate of 14.03%, and it's sustainable again because the payout ratio is under 20% at 18.74%. Now, at the time of recording, Intuit was actually trading 16.21% off of its 52-week high. It has an ex-dividend date of April 10th with a payout date of April 18th. And looking at this chart over the past 10 years, Intuit would have grown that $10,000 lump sum investment while only reinvesting dividends since into $66,150.72, which outperformed the S&P 500 by $34,410.20. And here it is, the moment you've been waiting for, and the stock I feel you must know about going into next week, and that's Cadent, stock ticker KAI. Including today's video, this is now the 9th time I've spoken about this stock right here on my channel, including 9 selections in a row. And if you go way back to April 7th of 2023, which was the first time I spoke about it, KAI is crushing the S&P 500 since that first mention by more than 30%. So let's check on the numbers behind that market outperformance. KAI is a quarterly payer in the industrial sector, paying $1.36 per share per year with a forward dividend yield of 0.4%. KAI has been paying and growing its dividend over the last 12 years. They have a 3-year dividend growth rate of 8.09%, a 5-year dividend growth rate of 6.56%, both of which are a little bit lower than I like, but I do love the payout ratio because it sits at just 12.19%. Here's another opportunity because at the time of recording, Cadent was trading 21.86% off of its 52-week high. It has an ex-dividend date of April 9th with a payout date of May 7th. And check out this chart. Over the past 10 years, that $10,000 investment into KAI, you can see would have grown into $70,029.23, which outperforms the S&P 500 by $38,288.71. As I said earlier in the video, it's very important to watch these videos the day I put them out because once the market closes on Friday or you watch it next week, the ex-dividend dates for all these stocks might have already passed, which means you now need to wait 3 long months before you get your first dividend from any of these high-quality companies, and you already know what Sweet Brown says.
Ain't nobody got time for that.
With that being said, you 100% already missed every ex-dividend date from last week's list, but if you're still in the market for 5 more high-quality dividend stocks, you can check that out right here. But until next time, see ya.